Welcome everyone to Vested Interest. This is Shane back again for the Stock Pick of the Day video. It is April 22nd. Yep, we're getting to the end of another month. Already the 22nd. A little over a week and a half left here in April before we turn the calendar again to May. We're going to take a look at Cardinal Health out of the healthcare sector today. We've looked at this one in the past. I think it's been a while since we've taken a look at this. So let's see how this one's hanging in there. It was down on the day. And if you are new to the channel or just have not done so, if you could take a moment, it really does help out a small YouTube channel like mine whenever you do these things. If you could hit that thumbs up button down below and let me know if you find value in the content, drop a comment down below as well. Hit the subscribe button. That's probably the most important. Make sure you're subscribed to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Hit that notification bell so you're notified whenever we put out any new content. Again, that really does help a small YouTube channel like mine with the YouTube algorithm. And dropping a comment down below does as well. We cover dividend growth investing on this channel. This is the Vested Interest Stock Screener. This is how I look at a company on a high level to see if I am interested in investing. If it meets 5 of 8 or 6 of 9, if it's a financial company like a bank, then it goes into my watch list. I do more of a deep dive into the financials. This is also how I set up the Stock Pick of the Day video. So we're going to run through this criteria here. You can pause and read through this. We'll jump back over to Cardinal Health, and you can check them out at their homepage, www.cardinalhealth.com. That's www.cardinalhealth.com. That is their homepage where I pulled this information from. Headquartered in Dublin, Ohio, Cardinal Health, Inc., ticker CAH, on the New York Stock Exchange, that's what the NYSE stands for, is a distributor of pharmaceuticals, a global manufacturer and distributor of medical and laboratory products, and a provider of performance and data solutions for healthcare facilities. We are a crucial link between the clinical and operational sides of healthcare, delivering end-to-end solutions and data-driving insights that advance healthcare and improve lives every day. With deep partnerships, diverse perspectives, and innovative digital solutions, we build connections across the continuum of care. So really, they are delivering equipment, they are helping with the digital side of it, right? So they are in the healthcare business. They are pretty much every aspect of healthcare beyond. I don't believe they have doctors and nurses. Well, maybe some of the people that do the research are doctors and nurses, but they don't really employ people as hospital staff is what I'm trying to say. With more than 50 years of experience, so they are older company, right? They've been around. I don't think they're going anywhere. As we have healthcare, that healthcare is only going to expand over time. So that gives you an idea of what Cardinal Health does. If you were to go to their homepage, you can get more into what products they offer, what services they offer, that sort of information. Now back to the reason we're taking a look at them. Down 4.95% on the day. We are talking about Cardinal Health, Inc., ticker CAH, out of the healthcare sector. Closed out the day at $102.83. 52-week range as low as $77.56, as high as $116.04. They are closer, they're a little bit closer to their 52-week high than their 52-week low. A market cap of $25.012 billion, a beta of 0.7, so less volatile than the overall market. Price to earnings ratio, PE, is elevated, $40.81 per share. That's a high PE. I'd love to see their forward. They don't show their forward PE. That is actually one of the things I like about stockanalysis.com. They'll have their PE currently, and then you can look right below it typically and see their forward PE. And that's why I use more than one source for information. But anyways, PE is a little elevated. Earnings per share, EPS, $2.52 per share. Earnings day coming up May 2nd. Forward dividend of $2. That's paid out over the year. They are a quarterly payer, so divide by 4 will tell you what that is, or you'll see it here in a little bit. Dividend yield of 1.85%. Not a very high dividend yield on this one. I usually like above 2%, but if you were to get it closer to the 52-week low, obviously that would probably bring it into, depending on how low it went, bring it into the 2% range. Ex-dividend date March 28th. Looks like they paid out just last week, April 15th. So kudos to those of you who may own this company out there. You probably got your payment already. And one-year target estimate, at least according to Yahoo Finance, $115.93 over the next calendar year. So they see some upside, and that would be not quite setting a new 52-week low, not quite getting back to the 52-week high, but they do see it going up from here. Now we're going to take a look at dividend yield theory to see if this one is potentially undervalued. To do that, we're going to take a look at their 5-year dividend yield average of 3.28%. We're going to compare it to its current 1.85%, or over here where it says forward 1.85%. Since this is lower than their 5-year average, that speaks to overvaluation, and significant overvaluation at that. So this one needs to come down quite a bit to be in the buy range, at least according to dividend yield theory. And payout ratio, I typically like 75% or lower. This is a bit elevated for me, 79.27%. That's starting to get into a range where it only leaves them 20% of their free cash flow to pay down debt, to make acquisitions, to reinvest back into the company, free cash flow for dividends. So it's getting a little tight. If they were to have a couple bad quarters, that could be a troublesome sign. So I like 75% or lower, and that's on the high side for a lot of people. Some people use 60 or lower, 60% or lower. I don't mind 75%, but 79% is definitely higher than what I typically look for. We're going to look down at their free cash flow. We want growing free cash flow over time, because dividends are paid out of free cash flow. And typically, if a company has growing free cash flow, they have growing dividends along with it. So going back to 2020, we see 1.5 billion here. 2021, 2 billion. 2022, 2.7, and 23. So really nice free cash flow growth here, but 2023 looks like a bit of a drop down, though if you look at the repurchase of shares, they doubled the repurchase of shares in 2023. So I would say you'd have to do the math, but it probably would account for the repurchase of shares doubling, would account for this drop in free cash flow. So I would say nice steady free cash flow growth on this one, which is nice. And like I said, plus they're repurchasing shares. I like to see that in the last couple of years really aggressively at that. Now, I always recommend more than one source. Another one that I like is stockanalysis.com. The one we saw on the previous page was Yahoo Finance. Just make sure you're not just blindly trusting one source for information. Information can be outdated. It can be incorrect. Everyone makes mistakes. So I recommend, at least 2 sources, if not 3. These are just 2 I like. You can pick any sources that you like. You don't have to use these 2. Stockanalysis.com has 14 stock analysts that have taken a look at this one. They call it a consensus buy, though it is right on the edge of buy and a hold. And if you were to go to their homepage, you could click on each one of these and it would tell you, so this would be a strong sell, sell, hold, buy, strong buy, and it would tell you out of the 14 analysts how many might call it a sell. There's probably some, how many might call it a hold, how many might call it a buy or a strong buy, and how many might even call it a strong sell. Right there with it close to a buy and a strong or hold, that leads me to believe it might be 1 or 2 in the sell, mostly in a hold, and maybe a couple in buy, something like that. But you could have to go there and check that out. They have a low estimate of $85 per share, which would be a 17.41% decrease from where it currently sits. Average estimate of $103, it would be a 0.08% increase, just a slight tick up from where it currently sits. And if it was to happen to hit their high of $125, it would be a 21.46% increase. All the while, you could collect that 1.85% dividend. Now we're going to jump into statistics here. We're going to look at return on invested capital and return on equity. ROE, return on equity, I like 10% or better. They're at negative 21.3%. Don't like to see that negative number there. Return on invested capital, again, I like 10% or better. They're at 53.14%. That's very good. Earnings per share growth, I like 5% or better, and this one is blowing that out of the water. EPS share growth expected at 54.71%. That is probably one of the highest I've ever seen for EPS growth. Kudos to them if they can hit that. That's very, very aggressive, very, very high earnings per share growth. Would be good as an investor if you get that type of return, and I'm assuming they're getting some of that from repurchasing shares. I'd have to do more research on this company if they have like an aggressive share repurchase program going on that could really fuel EPS. Revenue growth forecast, which would also help their, as they bring shares out of the market, that also helps bring down their cost basis as well, right? We saw it was 79% payout ratio there, which is pretty high. Well, if they have an aggressive share buyback program, that decreases the shares out there to pay dividends on, so it'll decrease that percentage over time as well. Revenue growth is also looking very good. It forecasted to 8.25% growth. Let's take a look at the dividend real quick and wrap this one up. Again, quarterly payout ratio is elevated. We saw Yahoo Finance had them at 79%. Even stockanalysis.com has them above 75% at 78.22%. So either way, above the metric there that I'd like to see them. But again, this could and should go down if they continue the aggressive stock buyback. You'd have to do some research and see if they have it seems like they doubled it this past year. Maybe they have an aggressive buyback plan over the next 2 or 3 years. And that's why their EPS growth is so high as well, potentially. I'm just speculating. I don't know that that's the case. You'd have to do some research on that, but that's what makes sense to me looking at the numbers. Dividend growth is slow, 0.99%. You're not getting which is actually, to me, not a good combination. Low dividend, starting dividend yield, 1.85%. Even if it pulled back, you can get it in the low 2%. With this low of dividend growth, I don't feel like it's worth it. I don't mind slow dividend growth. I think I mentioned this. If you caught my portfolio update from the weekend on Sunday, if you haven't, go check that out. I should put a link to it down below. Maybe I'll put a link to it down below. But anyways, I don't mind slower growing dividend growth if, let's say, I'm getting a 6-7% starting dividend yield, right? Verizon, for example, I get an over 6% dividend yield. It has a 1.9. It's a little better than this at 1.93% dividend growth. But I don't mind if this was like an 8% payer or something with only 0.99% dividend growth. That's one thing. But being under 2%, that's too low for me. Growth year is only 13, which is still, that's good. You have to start somewhere. I shouldn't say only. Buyback yield, good, 5.75%. Shareholder yield, 7.68%. Going back to 2021, they were paying 49 cents and some fractions of a penny here in dividends. Going back to June 2022, they raised it up to, well, fractions of a penny, for still 49 cents, but the fractions of a penny went from 0.4908 to 0.4957, so really slow. And raised it up again June 2023 to 50 cents and fractions of a penny. I would say if they're gonna, is it a June time frame? March. Yeah, it looks like March or June is when they look to. They didn't raise it up in March, so maybe in the June payment. They do pay out January, April, July, October. So not a bad one if you're looking for something in January. I'd look for much more of a pullback on this one. To be honest with you, the dividend growth, as low as it is, it's not one that I'd want to look. I've got a bunch of stuff in healthcare right now. Johnson & Johnson I'd add to before I'd pick up something like this. Personally, if you're a CAH, shareholder, it's not meant to be an insult. This is just me looking at the high level numbers here. It's not one I would put in my portfolio, though, if I'm being honest, right? I think I looked at this one at one point in time and thought that too. But let me know what you think of Cardinal Health. Is it in your portfolio? Is it one you're adding to on the pullback? Are you waiting for more of a pullback? Is it one you're avoiding? Is it one you're looking to sell? Might be on the higher end for that one. And with healthcare pulling back, maybe it's just the last domino to fall. Never know. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up. Ring the notification bell. Most importantly, hit that subscribe button. Join us on this journey to financial freedom. Join the vested interest community. Really would love to hear from you, so drop a comment down below. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So you have a company like Cardinal Health you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it down below. I'll try to work it in the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. I hope you have a great week. We'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risks. You can't lose money. You should never invest any amount of comfortable in. Always do your own research. Invest based on your situation, circumstances, and selected criteria, or seek the advice counsel certified financial advisor.